Joining us now to take a closer look at how retailers are faring this holiday season is Adrienne Tennant. She is the retail analyst at FBR Capital Markets. Adrienne, always glad to have you with us. So is this holiday season a disaster so far for retailers?
You know, it's actually not. I wouldn't use the word disaster. I would say that it's a very challenging environment. But what we're actually seeing is that inventory point that Monaco is making is very, very important here. And so what we're seeing is that the promotions are getting deeper and deeper. They're not yet matching what we saw on Black Friday, which is actually a good thing because technically speaking, we really have Saturday and Sunday because you have to think that people travel the weekdays in front of Christmas Eve.
Adrienne, what do you think the retailers learned, if anything, from last year when they almost trained consumers to expect 70% off of everything?
I think what they learned is that inventory management is absolutely key. If you can't get the top line, you can't get the comp, what you want to go for is the margin. That's a much healthier recovery cycle. And so if you're selling stuff at 40% off on first markdown, that's a lot better than having a ton of inventory, half your inventory selling at 60, 70, 80 off after Christmas.
We did hear of even some luxury retailers saying they are so paring back on inventory that they've run out of actually some top sellers. That's dangerous too, isn't it?
It is dangerous, and we're seeing that happen. The best stuff everywhere, from teen to Missy, is absolutely selling out. And so there are definitely, quote-unquote, sales left on the table. We're seeing it at J. Crew, at Chico's, certainly the places that actually don't have a lot of promotions going on, ironically. But what I would say is, again, when you're going through a recovery cycle, the worst thing that you could do, the big X factor is on the markdown. That's what really, really can hurt your margins.
How much is a consumer really frustrated? Let's just say if I go in to get something, I don't know, a coat, and it's not there, am I going to hold it against that retailer going forward?
I don't think so. I think that you're seeing such deep, initial markdowns. So 20% off is kind of normal. Nobody wants to pay, full price anymore. So I think that people are going in with the expectation, and they have been told that if you don't buy it at full price, that's the risk they run. So when they go in and they don't see it, they're kind of like, okay, I'll try to see if I can get it at another store. But that's the risk of having a good deal. So,
Adrienne, which stores are managing their inventories and their prices the best? What are the success stories from this season so far?
The success stories here are going to be clearly Chico's in the Missy sector, J. Crew in that kind of contemporary young adult sector. And then we're also seeing a lot of promotions at a name like Old Navy, but it's definitely working. It's definitely driving the business at better margins than last year. So Gap is another name that we like for holiday. And then finally in the teen space, American Eagle. They're doing a great job. Lots of promotions, but they bought to those promotions, so they're able to deliver them at good margin.
And who are the cautionary tales?
The cautionary tales, I would say, is something like the Pacific Sunwear, PSUN, and, somebody who hasn't quite gotten it on the merchandise side. So we're going to be a little bit more careful on those.
And really quickly here, Adrienne, before you leave us, what about the internet? What role has that played, for better or for worse, for some of the names you follow?
It's actually been growing a little bit faster than the total retail sales. So what I would say is, for the specialty guys, it's still very much of you want to be in the store, you want to feel the merchandise, but it's definitely higher margin business. So as that grows faster than retail, it's a net positive to overall margins.
Adrienne, thank you so much.